Gentlemen, boys and girls, welcome to another rendition of Mr. Ray's Real Estate. I am your host, Mr. Ray, aka Reverend Real Estate, aka the Juice Man, baby. I don't care what you call me, just call me. So today I want to talk a little bit about the BRRRR strategy. Before we get into that, I want to say I've missed you guys. It's been a minute. Yeah, I've been gone. I've been taking some time out, getting my life in order, getting right spiritually, mentally, emotionally, physically, in every way, baby. Every now and then you got to take some time away and you got to get it right. So that's what I've been doing, but I'm back now, baby. And I want to share something with you today. I want to talk to you a little bit about the BRRRR strategy. You all know how I love the BRRRR strategy. But I want to understand today, is the BRRRR strategy still applicable based on what's going on in the market today? Now, I know interest rates are up, supply is low, housing prices are high. What is it that determines if you make money or not using the BRRRR strategy? So today, I simply want to introduce the subject. And then over the next few weeks, I'm going to break it down and walk you through every bit and piece of the BRRRR strategy. Okay. So first thing we need to do, we need to define what is that strategy. And so let's talk about it. So when we talk about the BRRRR strategy, the B stands for buy. Now, in the BRRRR strategy, you got to make sure that you're buying property at a discount. You can't make money at the BRRRR by buying property at the retail value. So you want to think about, how can I purchase property 50 to 60% of the retail value so that you can have some room in there, have some equity in there, that you can force some equity, do some repairs, and bring it up to the market value. And that's where the sweet spot is. You got to learn how to buy property at a discount. You can't buy property at retail levels, be out here outbidding people trying to get properties and expect the BRRRR to work for you. It don't work like that. The first R in the BRRRR strategy is, once you buy it, you got to rehab it, baby. And that means you can only rehab it up to 75% of the ARV. You say, well, what's the ARV, Mr. Ray? Well, the ARV is the market value. It's the after repair value. It's the value of the property, what it's worth in the minds of those that's buying it. You can get an appraisal to determine ARV. You can do market rate comparisons to determine ARV. However you want to determine, it's going to be based on what are similar properties in that area selling for that have the same characteristics of your property. Is it 3-bed, 2-bath, 1-car, etc. So the rehab part of it is a very, very important part of it. But not only that, after you rehab it, you got to turn around and rent it. All right. And so we always use what I call the 1% rule. That is, whatever the value of the property is, let's say, for instance, you buy a property for $100,000, then the rent needs to be at least 1% of that per month. That is, the rent needs to be at least $1,000 a month. So that's very key, again, to the BRRRR strategy. And then once you got that property rented, most lenders will require that you have a 6-month seasoning. That is, have a renter in place for 6 months, and you can turn right around, refinance that, and get your money back. Now, when you bought the property initially, we assume that you bought it with cash, or you use private money, or you use line of credit or something like that, because that's the only way you can get properties at discount. You can't go down to the bank and expect the bank that's going to finance a house for you that needs a lot of repair. It won't happen. So you got to figure out how you can get your funds together so you can purchase the property using your line of credit, using credit cards, however you want to come up with the money to purchase it and make it look like cash, okay? Because eventually you want to turn around, once you forced appreciation, rehabbed it, and you brought it up to market value, you want to be able to go to a bank and you want to be able to present it to the bank and say, hey, I got this property, I got a tenant in here, I want to refinance that. And bank says, sure, we'll do that up to 75%. All right. And then you just turn around and do it again, baby. Because when you refinance, if you bought it right, you rehabbed it right, and you rented it right, you turn around, take all that money back, and you do it again. Come on, baby. Say it with me. Repeat, rinse, and repeat. But let's talk about some of the things that will impact investors when we're talking about market conditions. Because people say, well, is this a good time to buy properties? Well, it depends. And so I want to talk about some of the market conditions that are very, very important when we're talking about real estate investors, okay? So the first market condition that's very important is going to be, what are the prices or the available homes in the area that you're looking to rent in? Now, we're talking retail prices, that is, what are homes selling for in that area? That's going to have an impact on you, and that's a market condition as an investor you need to be aware of. How many houses are available in a particular area? If the supply is a lot, then that means that you got more to choose from. If there's not so many, it means that you're going to be vying against other people for those properties, which is probably going to drive the price of those properties up. And then for an investor like me, I want to know the quality of the neighborhood. Does it have good schools? Does it have shopping centers? What's in the neighborhood that's going to make it attractive that people are going to live there, because you want to attract the right tenants. Okay, what are the interest rates? What is the financing when you go in to refinance your property? What does that look like? Is 3%, 4%? We're going to look at some interest rate data here. I'm going to show you since January to today, interest rates have gone from 3% to 7%. What does that impact? What does that do to you as an investor? I want to talk about that today. And then what's the growth of the rates of the rents in the area that you're looking to invest in? Because you want to make sure that rents are growing and not going the wrong way. What causes rents to go the wrong way? High crime area, poor schools, things like that. So those are some of the conditions that you need to be aware of as a real estate investor. And then the quality of the tenants that you're going to be putting in those properties. That's very key, baby. You better get some right tenants in there. It's going to pay your rent on time. It's going to take care of your property. That is key. Look at is, what have home prices been doing? I talked about that's a very key factor. And if you look at this chart here, which is from Redfin, you'll see that home prices were up. If you look at 2013, 2014, they were up to around 15%, right? Year over year, home prices were up. If you look at other years, they were around 4 or 5%, but look here recently what's happened. Right after the pandemic, the average retail price of homes have gone up to 16%. That is a lot. Now, if you own these homes when they were right back here, you got a lot more equity in those properties. But if you're trying to buy right here, that's a problem. And so buying property at high prices as an investor is not a recipe for success. Now, the next thing that impacts you is the mortgage rates, right? And so if you look back what mortgage rates, back in January of this year, you can get mortgage rate 30-year fixed for around 3%. Oh, that's great money. But here we are in October, 9, 10 months later, the average rate for a mortgage is 7%. So we need to find out, how is that impacting me as an investor? What is that doing to my cash flow? What does that look like as far as my monthly payment? There's got to be some impact there. 3% is good money. That's almost like free money. 7%, a little bit more difficult. And let's talk about what that looks like. So what does interest rate do to your buying power? Well, it impacts you. If you have to go and get a mortgage and the interest rate keeps rising, then that's going to impact the amount of money that you're going to have to pay, and ultimately what your net cash flows are going to be. So let's look at this. This is a 30-year fixed mortgage, let's say for a $440,000 house. If the interest rate is 3%, that's going to cost you around $1,800 a month. Well, if that same interest rate is 5% a few months later, there you are at 23. So you're looking at a significant jump, $400 or $500 a month jump in your monthly payment, which will impact your bottom line. So you can see, as you look at this chart, the higher the property is, the more the impact the interest rate has on that payment. So we talked about market conditions. Let me show you one example here of how market conditions can impact your purchasing power. and your ability to cash flow on these properties. Let's assume we have a property, it's $100,000. We're going to buy it. It's $100,000 and it is worth, when it's totally repaired, after you brought it up to speed and you brought it up to what the properties are around it, it's $100,000. Let's assume in this case that you purchase it at a discount, which is what I'm saying. You gotta be able to purchase at a discount. Let's say we can purchase it at 60%. Okay. And at 60% said that's just 60% of what the ARV is, right? I got loan to value, it's the same thing. Let's assume that we have 15,000 in repairs. Also, that using the 1% rule, remember I said we got to get at least $1,000 a month. That is 1% of 100,000 as monthly rent. Okay, so we want to make sure that we can turn around and finance that thing, because we're using 60,000 in cash to purchase it, but we're going to turn around and refi it after about 6 months after we get a tenant in there. So we want to know, that we can cash flow this thing. And so let's assume that we could get it $75,000 for 30 years at 4%. Okay. And so that payment is going to be $358. Also, let's assume that taxes are $100 a month, insurance is $100 a month, and maintenance is $100 a month. We'll make those numbers up. So at the end of the day, look at that. You got a nice little fat cash flow after everything has been paid. And remember now, your tenant's going to be paying that for you. Your tenant is paying that monthly rent of $1,000, which is covering all of your expenses and giving you an additional $342 a month that you get to take home and put in your bank. Okay. Now, let's say the interest rate went up to 7%. How does that impact you? All right, let's look at it. Same property, same purchase price, same repair, same monthly, but look what happens different. Now we're going to say 7% is what we're going to get as opposed to 4%. So now that principal and interest goes up to $498 a month, right? And so if your other taxes, insurance, maintenance stays the same, at the end of the day, now you're only netting $200, which is what, about $140 different. That's significant in a month. If you're talking about, I went from making $342 a month to $200 a month, that is significant. So you can see the impact of what interest rate has on your ability to cash flow your investment property. So over the next few weeks, what I want to do is take you through each component of the BRRRR. And so the first week, I'll take you through how do you buy properties, and we'll look at what are some of the strategies and how you buy a property. Do you use cash? Can you get a loan on it? Do you use a line of credit? What are all the different strategies that you can use to buy these properties? And we'll look at criteria as far as what neighborhoods, what size property you want to buy and things like that. And then where do you find these properties at, Mr. Ray? Do I need to involve a real estate agent? What are the best areas to buy in? And when should I walk away from a deal? And how do I buy these properties from homeowners? And what's the conversation? I want to have all those conversations with you when I talk about how do you buy a property. And then how do you determine the value of the property in its current condition and what it's going to be when you finish fixing it up, right? So you want to know what that ARV is going to be at the end of the day. And then the next week, I want to talk to you about how do you repair the property. Now that you bought it, how do you repair it, right? How do you select your contractors? How do you put the bid together and get the estimates and send those out? And what renovations do you want to do? Do you want to redo the kitchen, the bathroom? You just want to put paint and carpet in? What are the things that are going to bring you the most value, and what's it going to cost you to do that, right? And then what should you budget for your holding costs, carrying costs, and things like that? And then we'll talk a little bit about do banks lend on properties that need repair, and what repairs bring the most value. And then the next week, we'll look at refinancing, because after you buy it, after you rehab it, you'll want to refinance it, right? So how do you find a good mortgage? How do you qualify for a mortgage? What's that process? What's the best product for your situation. I want to talk you through that. Does your interest rate impact your buying power? How quick can you refinance after you purchase the property? The banks call that seasoning. And what are banks looking for in investors? And then the documentation that you're going to be providing to get that refi, tax returns, W-2, all these things that the banks are going to want to see to determine if you're a good risk for them to rent to. And then you got the rented, right? And so we talked about the 1% rule. That's 1% of whatever you purchase the property for. This is a very key area because it determines if you make money or not, right? So how do you determine the right amount of rent? How do you find the right tenants? How do you select them? How do you screen them? What are the contracts? What are the lease agreements look like? What are the move in and move out documents that you have to have? Then you need to know what the landlord's responsible for, what the tenant's responsible for, and you need to be very aware of the Landlord-Tenant Act. So I'll take you through that in one of the weeks. And then, baby, I'm gonna let you have questions that you can ask me directly. Now, those questions you can ask directly here on the YouTube channel, and I'll make sure that I get in there and answer those for you. You can always email me. You got my email. But at the end of the day, we want to know is, can we still make money? Can we still make money, Mr. Ray, in the current market condition? I say yes, but you got to buy it right. So stay tuned. Look forward to seeing you in the coming weeks as we talk about the BRRRR strategy and how we can make money. God bless you, and we'll see you.